Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, April 29th, 2013. Okay, it's been a very quiet week, quiet to the upside. Last week we had the first down week we've had in a long time. This week it kind of recaptured it except for the end on Friday, which saw a 5-point drop in the S&Ps. And now we're opening up. It's now 5:08 Central Time, Sunday evening, and we are down half a point. Right, that little tiny dot that looks like a speck in the universe right now. All right, so one of the things I wanted to recognize here is that this whole move up here, sideways, down a little bit, up here, it moves slightly up and then slightly down, but it's still lower than the first wave back in the middle of March. So now we're sitting here, we're at a double top, and actually if you look at, I will extend this out so you can see that we're actually, this is a daily chart. So if you move this all the way out and actually go to a weekly, we're at a triple top. We're at a major crossroads here. So here we are. I think we've hit a new all-time high in the past week on the weekly. On the daily, on the daily, all that we've seen is a move that is a lower high on the waves right in here. Actually, let me extend this out a little bit here. Okay, so one of the things I wanted to, I'm sorry, we have a lower, okay, it's a slightly lower high from here and here to an obviously higher high on the cash price and here. One of the things that I wanted to bring to your attention is this crossover here and what happened back in April of last year. Let me see, what date is that here? That is, that was April of last year, yes. What happened on the crossover here and this move down? What happened on the crossover here on T1? These are both T1 crossovers here, and what happened, and the crossover that happened just recently, and we are right here. Nothing has happened so far. But in terms of time, this move was December, 4 months, 5.5 months up, 2.5 months down. 4 months up and 1.5 months down. This is 5 months up, and it's dropping. It's dropping below zero on T1. So we can expect T2 to follow and T3 to follow. That should bring us down to what happened the last 2 times, because things happen in threes. So this is 1, this is 2, this is a third peak. Threes never have disappointed me in the market for a very long time. And you can expect this to come down to where it came down before, to the 233 exponential moving average on the daily, which is 1452 right here. This number right here. So we're talking about it's right now, let me see, it is 1557 down to 1442. So 1557, I'm sorry, 1575. So we're talking about a 125-point move over the next month and it would not, if if we're lucky, it'll be nice and easy, and you'll have these zigzag patterns down where you're able to play, um, like resistance areas back to resistance areas. So we might, ideally, if this is given the scenario that it's going down, that it goes down, you have a chance to cover, you ride it up a little bit, you have a chance to cover, you ride it up a little bit, kind of like up and down and up and down, up, down until we hit 1452 somewhere a month and a half from now. That would be the ideal. Okay. It probably won't be like that. It may, in a panic, look something like what happened to gold last week, where it was down 80 points on Friday or 88 points on Friday, and then if you thought that it was going to come back on Monday, all of a sudden everybody had margin calls, and it was actually down 133 the next day. So these are all possibilities. So just telling you to be aware. All right, looking at the 21-minute chart, it goes back to this, where this red line is right here. That covers practically everything that you see on this screen. But take a look at this. If you're playing the SPYs, it crossed over here. You had a nice run down. I'm sorry, if you're following, not the SPYs, if you're playing the SPY or playing the E-mini futures options or just shorting the ES. Nice runs down here, pop back up, nice run down here. When it crossed up, bing, up here, straight up, sideways, up again, and then down a little bit on on the end of Thursday and into Friday. So again, one peak, two peaks. You can definitely expect a second peak here, another move up here, and then another move down. Almost everything happens in threes, but right now we're concentrating on it going on right now and an opportunity to short. Okay, if you are a day trader using the S&P minis, you can see moves that are generated. This is just as a point of reference. This is from 8:30. These are the cash, when the cash price starts the cash exchange starts generating. So this is overnight, basically the last portion of this. So this is Friday, Thursday, and Wednesday. But you can see on Wednesday there was a move up on T4, which was about here at 1575. That took you all the way to 1587 before rule of thumb is you use one wave like T4 to get in. You can use either T3 to get out right here or T2 to get out on 3 declining waves, or T1, 3 declining waves as the cash price moves up. This pattern happens over and over again. So if you're looking at this wave right here, you're out right here. For T2, you're out a little bit lower. For T3, if you want to wait that long, you're out about here. But you're still, and then you're using T4 to get in right here, which is about right here. This is being conservative actually on a day trade. And then you're out when T2 crosses back over. You're back in right here. Now you've missed part of the bottom because you're taking more of a conservative play, and you're going to miss the first 3 or 4 or 5 points here. But then you've gotten in at 1575, and you've ridden up to 1580 into the near 230 in the close. When you see this dropping off a little bit, and it's getting near the close, and you just cover. Okay, let's move on to some stocks. Okay, let's look at Apple right here. Apple looks like it's, like the past few days, it looks like it's on a tear, and everybody who got excuse me, who got in at higher prices is looking for this daily to move all the way back up to, like where they bought it at 500. Um, the likelihood of that happening, of this popping all the way up to here, is fairly unlikely. But T2, this is a daily chart here. So we're looking at the there is a possibility that this will move back up to 440, which is the 55 period exponential moving average. 440, and it's right now at 417. I think that's correct. Price is 417.20, up 880 on the day. It was up to 418.76. So it may go up to 1440. But it didn't. Okay, on the left-hand chart here, my target in this area was 1373. It kind of moved up just a little bit with the movement up during the weekly, but now it's 374. So if it breaches 374, in concert with the stock market going down, we could actually see 300 on, or 298, which is the next major resistance, or not resistance, but target for the exponential moving averages. So yes, if it moves up, if you're lucky enough to get up to 440, by that time, these waves moving up right now and heading towards zero once again, because T3, T4, and T5 are already below zero. On the weekly, T1, T2, T3, and T4 are completely below zero. I believe that's, let me see, is that accurate? T4 is now below zero as of last week. So I know all you Apple fans who love your Apple computers and iPhones and iPads. They're fantastic products, but that has nothing to do with what the stock is going to do. Absolutely nothing. Okay, I moved this to a 21-minute chart, and it looks like it actually looks good to the upside no matter what the market does in the next few days, because this is already, like 3 days ago, the T3, T2, T3, T4, and T5 went above zero, and it looks like the long wave wants to go above zero too. So the last time it went down below zero, it was trading at about 440. So there is a real possibility. Like here, when it started climbing up, right here, it hit this and a little bit above, which puts it at right about 336 to 340, which is about where it was on the daily chart. All right, let's move on to another stock. All right, we're going to look at Goldman Sachs, and I think we're just going to do a quick wrap because nothing's really going on. The S&Ps are down 75. It's kind of quiet. It's a wait and see. Don't be confused with investment versus people who are scared to death of this market. The ones that won't get in, the ones that see an opportunity and want to get in and want to get out, the people on CNBC who say they're long-term traders. We're looking at your investments because we have your best interest in mind, and we're looking 3 to 5 years out. Well, even the ones that are looking 3 to 5 years out are trading an average of once every 21 to 30 days. So that's their average. Some of them stay in longer, some of them stay in shorter. All right, we're looking at Goldman Sachs here. On the left, we have, let me get a little more. Let me get a little more data on both of these so it doesn't screw up the moving averages, which I actually made a mistake on last week. by not extending it too much. Okay, so the daily chart is, these are the trading waves. T1 below 0, T2 below 0, T3 below 0, and the larger wave, the orange larger wave on T3 is 1 or 2 days from going below 0. On the left, on the right-hand chart, we have the 21. When the 21 went below 0, this went from 150 down to I think that's 135, 135, being like that. Now, you did take a little pressure. If you were in options, you took a lot of pressure right in this area because it popped up to new highs, even though this was going below 0 and T2 was going below 0. But if you just stuck with the plan and kind of walked away from the computer, you were fine. If you bought here, right in here, you did take some heat for a couple points. It went in your favor, and then it went down a little bit. You took some heat, but then by that time, T2 was locked in above 0. So now, same thing. T1 below 0, right in here. Okay, this had the opportunity to pop like 3 or 4 days in a row when the market was running, basically went sideways. So this is even a worse sign than what happened here and here to the downside and here to the upside. And since usually you would expect it to go up to 145, never made it up there. You know, like once T1 went below 0, you would expect it to pop just a little bit, especially off these exponential moving averages. The cluster right here, let me get rid of all these so you can see it. Okay, you see the cluster. You see the cluster right here. You would expect it to bounce a little bit. It did bounce. It bounced about 1.5 points. But usually you would expect it to bounce 3 or 4 points up here and then wait for T2 to cross 0. Well, none of that happened. So what I see in terms of this crossing and this crossing on the daily on T1, 2, and 3, I see this happening, boom, like this on Goldman Sachs. For those of you who trade gold, I don't know if you got this, but this is what I do. I generally don't do videos that I give away for free on gold, but I do them for private clients. We made this trade this week for my clients, which was a move right here when T2 crossed, because there were other waves that confirmed this. Right about 14, 16, 14, 18, and this was the crossover on the way out. So they got in at 14, 16. Let's just call it let me see, 14, 16 to 14. It went to 1480. I think we got like 1650 points out of this on the way up. This is like a day and a half trade. So most of my small lot clients have do 2 to 4 lots, so that's $5,000 a contract. They made out really, really nicely. So if you're interested in trading with me as a private client,